These are the 20 leading economic indicators that we track on a monthly basis. There's a lot of research behind these, but it's nice to just present this in an overall summary so you get a feel of what's going on. This was back in January. Remember, green is good. It's moving in the right trend. Yellow means it's not moving in either direction. Red means it's bad. So as you can see, things were not necessarily looking good. International economics weren't doing good at all. The economic outlook over in Europe and Asia wasn't looking good. Equity market valuations wasn't looking good. Reason was the markets have been going up, right? The higher the market goes, the less value is out there, right? It's been appreciating, and it depreciated a little bit faster, I think, than most people expected. Okay, we're not complaining because our accounts are up and this and that, but we believe that the market's a little overpriced right now. Okay, so that's basically what that is signaling. And geopolitical risk, that isn't going away, right? Russia, Ukraine, China, Israel, Hamas. And we've got a lot of stuff going on in the world, and we don't know, how that's going to impact us in the future. Let's fast forward to today, July. The picture's changed quite a bit. As you can see, consumer sentiment, that's how people feel about the economy, has actually improved quite a bit. The labor market actually has improved a little bit. Why? Because it's not as overheated as it was. I mean, there was a time there was 9 jobs for every applicant. Let's go into a little bit more detail of what specifically has changed. The biggest concern 2 years ago was inflation. When you look at the left side of this, we're looking at the United States, the Eurozone, the United Kingdom, and Japan. Look at the all-time highs of inflation and when it happened. The United States, inflation peaked in June of 2022 at 9.1%. In the Eurozone, it happened in October. It went over 10%. 10.6% was their highest inflation peak. In the United Kingdom, it went over 11%. So even though we knew it was bad here, it was actually worse overseas, and that's why the international outlook looked worse than the United States, right? Now we can see basically where we're at here. At the end of April, the United States was running about 3.4. Actually, it's down to 3.3 now. But 3.4, the Eurozone dropped from 10 down to 2.5, 2.4. And the United Kingdom from 11 down to 2. Now, when we look at this side, this is the rate cut plan, we believe, for the Feds coming up. The Feds raised the interest rates up here to 5.25% to 5.5%. The actual effective rate that is going on right now is 5.33. That's the Fed's effective funds, overnight funds rate. That's why mortgages are still up 7%, 8%, right? Things like that, car loans, everything's up compared to what it was just a few years ago. But we believe that the Fed's going to start making cuts, and the first may come as soon as this September. We believe that there's going to be 1 to 3 rate cuts this year, and that would be a good signal, again, for the stock market, that companies would be able to go out and borrow cheaper. Consumers will be able to go out and afford cars and homes and things cheaper than they can today. So we're kind of looking at rates coming down over the next couple years, starting towards the end of this year. When we look at the actual growth of economies, this chart is kind of interesting because it represents, these dots represent 2 things. First, the size of the dot represents the size of the economy of that country relative to everybody else. So you can see the United States, the Eurozone, and China are the largest economies in the world. The higher up you are, the more you are growing, the faster you are growing. The lower you are, the less you are growing. Okay, and you've heard us talk for a while that we've been staying invested primarily in the US, right? Not investing much in overseas, and this is why, because they're still lagging. Their economic growth is lagging the United States. However, Europe has been coming up, so that's something we're keeping an eye on. But I think it's really interesting to see that even though our economy is slowing, we're still one of the fastest growing economies in the world.